Peter Schiff and Joran Brook. Joran is with the Ayn Rand Institute. Peter is with Euro-Pacific Capital. And Peter, what do you make of this move? I know you're probably not surprised, but you are, I bet, dismayed.
No, it's an absolute disgrace. Ben Bernanke is leading us down the path to financial ruin. This is not just the inflation genie being let out of the bottle. This is the blue gin. You know, he's going to turn the dollar into monopoly money. You know, they need to be raising interest rates, not because the economy is in good shape. It's in lousy shape. We're going to go through a recession. In fact, we're in it right now. The GDP numbers that came out for the fourth quarter showed 0.6% growth, but they assumed inflation was only 2.6% for all of 2007. That is absurd. Inflation is at least 3 times that high. And, you know, yesterday one of the panelists said, but we have to accept the government numbers. I'm not going to close my eyes and remain blind to what's obvious. I'm not going to listen to the government. And they are ruining this economy. They are ruining our currency. They need to let this recession run its course.
Well, you're on, not according to Wall Street right now. We've got green numbers on the Dow, on the NASDAQ, S&P, Russell 2000. It's all green right now. Are they blind?
Well, I think they are blind. They're blind to the long term. I think short term, this is going to encourage some people. Short term, look, this is a bailout. This is a bailout of the banks. This is a bailout of homeowners. I'm going to go refinance my mortgage, you know, with rates this low. This is a way to get us to borrow money. But the long-term solution for the U.S. economy is not to get us to borrow and spend more money. That will bring about more inflation. I think the stagflation word we should start thinking about, because I think it could be a reality. We could see real economic slowdown, and the inflation numbers pick up. So they're real. This places the U.S. economy at more risk, not less risk.
You know, these
let me
arrows,
also point out,
David, these green arrows are meaningless. Look at the dollar. Look what's happening to gold. Look what's happening to euro. All these arrows should be red. Our assets are losing value in every currency. They're losing value against gold. It's only against the dollar, which Ben Bernanke is debasing. You know, Alan Greenspan was the worst Fed chairman we ever had, and now it looks like Ben Bernanke is going to try to steal his crown.
That's a guy I want to go partying with.
What about that point that Peter makes about the dollar? Do average Americans feel it? Are they aware of that?
Worrying about the dollar going down is like worrying at a frat party you had too much when the keg is empty. Look, we did once tighten in the midst of a recession to defend the dollar. That was in 1932, and it deepened the Great Depression. There were a lot of other things that went into the Great Depression, but that was another factor. We have made a decision as a nation, for better or worse, that defending the currency takes a backseat to financial stability.
Well, I'm glad I own a bunch of gold.
Well,
and that's how we got the 70s. That's how we got stagflation in the 70s.
Speaking of the dollar, hold on. Speaking of the dollar, Treasury Secretary Henry Paulson is about to speak in Washington, D.C. We do have a camera there, and the minute he begins to speak, we will take that live. He is expecting to make some comments about what has happened. And David, I don't know if you noticed this, but we should bring Neil in on this. You talked about mortgages and rates. Within minutes of the Fed's decision, Bank of America announced that they are lowering their prime lending rate to 6% from 6.5%.
They were first last time, too.
Is somebody standing there with a button?
Well, someone will say, cut to right, cut to right, cut to right. But you know, it's interesting, guys. I mean, you can lower the rates, as Raul pointed out, and I think you're right. Your preference should be not so much the dollar right now as the immediate fire. If you buy the argument the economy is the fire, that's debatable. But I think, you know, even if you get people with the wherewithal to refinance, and as you guys have been reporting, we are seeing a refinancing wave, the big trouble seems to be in communities across the country is getting the appraisal you want so that you can refinance that vehicle, and then getting to lenders who are reluctant to give you that deal, because no matter how low rates go, they're being tougher than a son of a gun to give you the loan. So lowering rates certainly helps, but it doesn't make them any less stingy.
Randall, Ronald Reagan used to say, I like a strong dollar. He said, I don't know exactly why, but it sounds good to me to have a strong dollar. And he had a strong dollar policy, but he also brought down inflation. You can have both. We always focus on what the Fed does about the dollar, but doesn't the Treasury, and we're about to hear from Hank Paulson talk about this, can't they do something on their own to strengthen the dollar?
They have to stand up and say for sure that we want a strong dollar. This has been an empty rhetoric for years now. They are very much acquiescing to a lower dollar, because I don't see that there is any other way out.
They're acquiescing because a weaker dollar helps.
They can't do anything.
I don't know what it helps. I don't know but what you can do to avoid it.
Peter?
What difference does it make what the Treasury says? You know, it's like a kid going to school and telling his teacher he has a straight A policy.
Here's why, Peter, because Liz and Dave are going to go.
Yeah, no, it's like a kid tells his teacher he has a straight A policy, but he skips class and he doesn't study. He's not going to get A's just by saying he has a policy.
Tell me about it. That was my life.
The Treasury could say they got a strong dollar policy all they want, but if we got Ben Bernanke debasing the money, you know, it's going to go down, and it's going to go a lot lower.
You're on, you know, Paul O'Neill said just a couple of months ago, he said, you know, everybody wants to do a strong dollar, etc., but if you jump in and try and do anything, like to prop up the dollar, intervention, which we've seen across the board globally in years past, then isn't that a little bit artificial?
But we can't intervene. We don't even have any
because we're printing money, we're lowering interest rates. This is all artificial. The only way to prop up the dollar is to reduce the money supply. It's to buy back dollars, and they're not willing to do that. They're doing the exact opposite. They're printing more dollars. They're circulating more credit into the markets, which debases the country. Look, this system is all messed up. The monetary system in the United States it's inevitable that we'll have bubbles, we'll have recessions. These cycles are inevitable given the kind of monetary system, this paper money that we have. You know, what we should be really talking about is a gold standard. We really should be talking about topics that Peter and I have talked about in the past. You know, the Fed, by its very nature, can only mess things up. It can mess them up more. It can mess them up less. I think they're doing a better job of messing
we
things
don't
up
have
right now.
Euron running for president. We don't have Peter Schiff running for president. Ron Paul doesn't sound like he's going to win the presidency. So short of that, what are we going to do?
You know, I think when all is said and done, guys, and I could be wrong on it, it's about housing, stupid. It's about homes, stupid. It's about your mortgage and whether you can afford it. It's about your home equity loan and whether you can carry it. And all the other stuff, I think, Randall, maybe you could... the other stuff is noise.
No, I think that's right.
Yeah, but Neil, home prices are going a lot lower.
This is a housing
the Fed can't stop that. They're going to go a lot lower.
Well, maybe, but I'm saying that's what this is really about, Peter. I think in the end, your comments notwithstanding, I think that's what this is about. Just try to get a floor going.
And what's more, in Japan, you had a real estate deflation through the 90s. The yen peaked and then also declined. Who is going to want to invest in a country where there is a credit deflation, asset deflation, and we're dependent on foreign investors coming to buy our assets?
Again, we're waiting for Henry Paulson, the Treasury Secretary. He's supposed to speak at the Real Estate Roundtable of State of the Industry meeting. The state of the industry isn't so great. We know that. But as we wait for this, Peter, give us a comment on what you were just about to say regarding that.
The only way the Fed can stop real estate prices from falling is by engineering every other price to go up. So they can keep our homes at these artificial levels as long as food prices and energy prices and clothing and furniture, if they can get all those other prices to rise, if they can create so much inflation, then they can keep nominal home prices floating. But that's not going to do us any good. That's going to wipe out the middle class. That's going to wipe out the savers. It's going to wipe out people on fixed incomes. And yeah, I'm not running for president. Euron's not running for president. But Ron Paul is. And he's the only person that understands this. He's the only person that's talking about putting us back on sound money. And if it's not obvious
enough already, Peter Schiff supports Ron Paul for president. But we are in a political year. He's absolutely correct. And in the political years, we get short-term solutions, don't we?
Don't you guys find it odd that we're pushing for bigger government? And that's the trend with the stimulus package and all. And smaller rates, if you will. You know what I mean? So a more generous monetary policy and a bigger government one. And I don't know what longer term that means outside of saying that we're trusting the government to be big and to help us. Well, and we're hoping in the meantime that the Fed will kind of goose that.
But Randall, housing, meaning bring out the housing picture from the GDP, and the third quarter of 2007 did not look nearly as bad. Fourth didn't look that horrible. You know, we've just gotten the number today that shows a market slowdown, but still, with that one part of housing eliminated.
But I'm saying that credit is contracting throughout the system, and you're cutting off, you're still standing on the windpipe for the economy to breathe. And credit is being destroyed as fast as the Fed is creating it. That's what needs to be done to prevent an asset deflation. Nobody's going to go out and buy cars if their house is foreclosed
But
upon.
also, you know what's going to happen with this new credit? It's not going to go into the U.S. economy. Personally, I'm going to borrow some more money on my margin account and buy more gold stocks. I mean, people are going to take this cheap money and bring it out of the United States. They're going to buy foreign assets. They're going to buy commodities. They're not going to want to sink it back into this bottomless pit.
Well, a lot of people are going to want to readjust their rates on their home mortgage.
Sure.
Yeah, but who's going to want to take the other side of that trade? Who's going to want to be a lender?
Guys, if we can hold on a second. Henry Paulson, the